So my name is Anna. I lead an organisation called the Finance Innovation Lab. I guess I'm here to provide the alternative perspective. Just so you know who the Finance Innovation Lab is, we're a charity. Our mission is to transform the financial system, and we mean that literally. We want to create a financial system that serves people and planet. So if you like, that would be impact investment as the default. We've been going since the start of the financial crisis, when fair few people noticed that finance wasn't really working that well. We were founded by the Institute of Chartered Accountants and the World Wildlife Fund coming together to address that problem, and now we're an independent charity. And I've been asked to say some things about impact investment and fintech, and I think I have 4 things to say. I'm going to try and keep it to 4. And the first one is this, and I guess I'm taking as my definition of impact investment that it's an investment that aims to achieve a social and environmental return of some sort alongside a financial return. And the first thing I would say to that is that all investments are impact investments. Actually, every single investment has an impact on society and the environment. It's just that in the majority of cases, that's not explicit and it's not intentional. So if you want to look at the amount of investment in fossil fuels versus the trajectory we're on and the amount of divestment we actually have to do, I don't think someone's sitting in a room consciously going, actually this is a great idea to just plough more money into fossil fuels when actually it's screwing our entire planet, as you can probably see in the news right now. I don't think that's a conscious decision. I don't think it's people who are willingly doing that. I think it's just the fact that that impact is not actually thought about, it's not realised. You want to look at the housing crisis. You know, you've got people living now who are working exceptionally hard at high-level jobs who cannot afford to buy a house because people who are investing in houses are seeing them as an asset, not as a place to live in. I don't think they're consciously trying to create a problem for those people. I think it's just that it's not factored into the decision-making. Or if you want to look at the fact that there's 8 people in the world that own the wealth of half the world, I don't think that's something that people are choosing to do when they're making their investment decisions. It's just that it's not factored in. So I think what I would say is that actually this term impact investment is a recognition that something has gone wrong in the process of decision making, and that if we're only looking at the form of economic value we can generate, or even financial value we can generate, then actually we're not considering all the forms of value that actually matter to human beings. Because I would also say that most of the people in this room care about their family, care about their futures, care about the general state of the human race, care about the state of London, care about the state of New York. Actually, all of these things are impacted by the financial decisions we make, and these things are not factored into those decisions at the moment. I don't think that's just something that the financial practitioners need to pick up. I think that's something the regulators need to pick up as well. At the moment, the regulators are regulating only for financial return. They are trying to protect consumers against financial loss, and yet they are letting the financial system walk into a situation where actually we are creating a future that exceeds the planetary boundaries that we've got, that actually our planet cannot continue to cope. We're already exceeding those in terms of carbon, in terms of nitrogen, in terms of water provision. And yet actually, at the moment, it's like, did you get the right interest rate printed on your leaflet? There's something going very wrong in the regulation there. I think that actually, even on its own terms, to not consider for example, the climate impact of investments is not a good financial decision. If the Bank of England has recognised that climate change presents a risk to the stability of the financial system, then it's probably in our interest to factor that in. And yet somehow, even on those terms, it's not getting factored into decision making. I guess that's the second thing that I've kind of blurred into. I think the third thing I would say is I think there's something behind impact investing that is an assumption that the market can fix everything. And I absolutely am not here to say that markets don't work. I'm not a socialist. I'm not a communist. I'm not anything. I think capitalism could work well, just not maybe this version that we've got. But I think that actually if fintech has potential, it's because it actually can reconstruct forms of the market. So say blockchain. I don't think blockchain on its own, like as a technology, is either good or bad. It's what you use it for. Blockchain can be used for democratic decision making. It can be used to record, communicate and transact different types of value. That's interesting, and that's where for me fintech gets really interesting, is how do you apply that to the fact that actually if you ask most people in the world what matters to them, yes, economic security matters, but that's set within a whole range of things that we want out of life. So how can we use blockchain to actually broaden and deepen our sense of what the economy is here for and what the financial system is here for? That to me is when stuff starts to get really, really interesting. My worry with where a lot of fintech is going is that the measure of what is good fintech is that it's quicker and faster ways of doing the same thing that the financial system is doing now. I have seen what the financial system does. I don't really want to speed that up anymore because I think, it took us quite a while to get to the financial crisis 10 years ago. Most of the people I work with a lot of economists, policy forecasters, they know another one's coming. I don't really want it to come any faster than the last. So I'm not sure that speeding up the status quo is really the most useful thing finance can do.
So, hey, hold on a minute.
And then we get onto the panel in a minute. Don't worry. You can come up mid-speech and take my coffee. Let's see. The final thing I would say is that I think the biggest contribution fintech can make, if it chooses to, is to actually change the way finance is done. Actually think about how we do finance differently. And I think actually there are many applications of fintech that have that power in its hand. I'm not happy with the idea that finance contributes to the current trajectory we're on and then you give some money to charity. I know it sounds quite radical, but how about the activities of business actually contribute to the good stuff? That to me is much more useful than actually keeping us on a path which isn't turning out that well. I don't know about me, but recently I looked at the world, it's not looking that great. I'm not convinced that a financial system which props up the current state of the world and then gives some money to benefit a certain group of people is actually what we want. How about it contributes to the solutions all the time? That for me is way more interesting than what it does now. And I suppose in terms of fintech, what I would say is think about that, because we have a chance here. This is an emerging industry. It's hugely supported by the government, but equally they recognise not only do we depend on the financial system for GDP, actually it shapes so much of our lives. I think it would be very unimaginative if all we do with fintech is recreate the current system with a nice helping on the side of charity or do-gooding. Actually, I would much rather that we build a fintech ecosystem that is doing something way more socially useful than the financial system that we've got now. I'm happy to take questions.
Yeah,
This one.
you were talking about...
Sorry, the lady behind you had a
hand.
I completely agree with you on a lot of things that you've said. I think the problem is that the costs aren't quantifiable sometimes. For example, the costs to the environment, costs to human lives even. It's not all, people can't quantify it even. How do you put a value on a life, for example?
I would agree in some senses. I don't think that's a reason not to value it, because we manage to value life generally. So I think that, again, I think decision making can factor that in. I mean, if you look at things like the Stern Review, actually what they have done there is calculate the cost to GDP of mitigating climate change now, so stopping going over 2 degrees C and the impacts that would have, versus actually the cost of adapting to what happens. And they have found that actually it's way, way cheaper to stop the damage than to adapt to it. And there's millions and millions of assumptions built into that economic modelling, but there is always millions and millions of assumptions built into economic modelling. If you look at a company you're going to invest in, you're not just assessing something that is absolutely verifiable. You're constantly making assumptions about the productivity there. So I think it's more a case of actually understanding that the economic models that we have now don't really factor in that well, for example, what the costs and benefits would be of the shift to a low-carbon economy, nor do they factor in the challenges that are posed by the level of inequality that we've got in society. So I'm not saying it is easy, but I don't think that's a reason not to do it. And I realise that in the current corporate culture, actually that's a really hard thing to raise, because it's constantly rate of return, and it's only one form of return. And it's very hard to raise that in a meeting and say, well, what about the other forms? I understand that you sound like a fluffy hippie, but I still don't think that's a reason not to do it.